Hello and welcome to another update video about XRP. XRP is currently in a sideways triangle on the larger time frame. I think it's one of the days, now it's Friday, that we should take a look at the bigger picture again. Covered that, I think, in the beginning of the week. Now it's end of the week, so it's time to get everybody on the same page. New viewers need to be made aware about the larger time frame wave patterns. So that's what we want to do. That's why we're highlighting here also from time to time the patterns on the daily or even 4-day chart. Very, very important. So looking at the bigger picture here, there are two wave counts I'm watching. First of all, in the medium term, they are both following the same structure. Okay, and you will see why. It's also important to recognize that we're moving in a triangle pattern. You could just sort of cut it in half, basically. And maybe I should highlight that in yellow. And then you see that we are sort of in the lower half, right, of that triangle pattern. Most price action has also happened in the lower half of the triangle. Now, I'm not sure if that means really bearish, but certainly there's a lot of downside pressure. The price could not maintain really a position for long in the upper half. Now, that's a very crudely drawn line, of course, but I just want to bring across the point, right, that it seems to be difficult for the bulls to drive the price above this line, and it is located around it's not exact, but like 64 cents. And whenever the price breaks above it, soon the sellers are coming in and drive the price below it. So it's just an observation. It just certainly doesn't really show strength, and it shows as well that we are still caught in sort of a bearish, you could say a bearish maybe a bearish cycle, so that we are in sort of in that lower half of the triangle, and the bulls are just too weak. Okay, so that means as well that if we can get a break above that line, it could be a signal, it could be something bullish. Now in the short term, I'd say it would require a break above the July high. So if we reposition that line a bit, still accurate, but it shows you roughly all these points of reversals. Here was support, not exact, of course, but certainly the price respected that level, and when it broke, it led to a strong downfall. Here as well, couldn't maintain it, tested. I think that's the key line. I might leave it on the chart. It is actually at 66 cents, so we should leave it like that, and then it's just indicating if the price can break above it, that would be potentially a bullish signal. Of course, it means that we require a sustained breakout. Yeah, requires a sustained breakout, not just like a short, brief, break above it and a failure. No, it requires a sustained break, something convincing. So this has nothing to do with Elliott wave, but it is still quite important. It is still quite important to understand this key level. From an Elliott wave point of view, however, we are moving in an Elliott wave triangle. And by the way, I will highlight that as a dotted line, I think. Yeah, okay. So in this Elliott wave triangle, there's a bullish and a bearish version of the triangle. But as I said, in the short term, in the medium term, they're both moving together. So if we really topped here in a third wave, that's the bullish count, then we saw the triangle pattern form an A wave, a B wave, a C wave, wave D could be unfolding right now, right? And then the E wave could still happen. That would mean we need a lower high and a higher low. And the lower high could be forming right now, but we need to push a little bit higher. And then there would still be a need for a higher low. So lower high, higher low. That's the wave D of the yellow triangle and the E wave of the yellow triangle to complete a fourth wave, which could then lead to new highs. But that's a lot to ask. And it also means more sideways action. And it also means that we are still within this triangle and it's just moving in corrective wave patterns. So there is much more work needed to really confirm that further. And we won't know if it's the yellow or the white count, because in the white scenario, we're dealing with a more bearish scenario. And this is the white scenario in which there's also a triangle, but it's embedded in a larger correction. So if we say a larger wave 1 topped here in 2018, which is possible as well, Then we have an A wave down into that 2020 low. The B wave is a triangle. B waves can be triangles. So can be wave 4s. But then if it's a B wave, it would break down. But also in this triangle, we completed the A wave of the triangle. We completed the B wave. This is a C wave, which could also push higher. And then a DE. All that means is, if we push above that 66-cent level, there's a good chance we push higher into that $1.26 plus area. But we won't know at that stage if it's the D wave of the triangle or the C wave, which means we have to be on the side of caution. From up here, we would possibly be looking for a corrective pullback again. And then that will be way out anyway, so it will take a while. So it's too early to discuss which one it is now, but it means that a break above 66 cents could drive us to that $1.26 level. Is that then going to be bullish or bearish? Well, based on a triangle assessment, it would actually mean that we are probably not going to see a direct breakout, but it could happen, of course. But then a different pattern would apply. But the thing is, in both scenarios, as long as this support region is holding down there, we are watching for higher prices. Okay, now that support region has held now for a long time. It's very stable. It's a stable element on the chart. It's between 37 cents and 52. And the market is currently above that support area. So we had a couple of reactions most recently to that support region. That's really what matters. The wave counts give us these support levels. And so far, the wave count is respecting the roadmap, or let's say the chart is respecting here the roadmap and the parameters. So the support levels are holding, which means as long as they do, we can look for higher prices possibly. And it would indicate a possible push to the upside from here. Yeah, this is the micro pattern. This is the 1 hour chart. The problem here on the 1 hour time frame is simply that we don't have a clear impulsive move to the upside. So from those low points that formed in July, the 5th of July, we've only seen corrective rallies. So I have yesterday in the video, I've added a triangle pattern here just to indicate, I mean, we are now in a range. So really to follow the pathway higher that I also just showed you on the longer time frame chart, initially we need a break above the trend line and then obviously a break above that 66 cent level. And then in the first step, we can get to 72 cents, 81, 88, which would already be an achievement. But there is no local setup here that would at the moment give me strong confidence that we are on our way out of the range. So this is still boring sideways action, but I'm observing it. I'm watching it, and I'll definitely keep you updated. So for now, this is all just corrective mess, which can still spend another week moving sideways. But I'll keep you updated. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.